Good evening. Thanks very much for joining us on India Business Hour. I'm Shireen Bhan. The headlines we are tracking tonight. India's current account deficit for the first quarter springs a pleasant surprise, widens to nearly $24 billion, but well below market estimate of $30 billion. Strong services export growth keeps the deficit in check.
Services, they're actually rocking because last year's excellent services performance of $250 billion plus was without travel, tourism and other elements.
Outgoing Commerce Secretary says India's export and services sector in particular will continue to go exceedingly well, adds that a return in confidence is clearly visible. Says the trade deal between India and the UK is in the last lap. 90% of the issues have been ironed out. That's an exclusive. Stock markets declined for the seventh day. The Sensex and the Nifty remain at their lowest level in over 2 months. The rupee gains against the dollar but remains closer to the 82 mark. The Monetary Policy Committee is expected to hike the repo rate for the fourth consecutive time tomorrow. A CNBC-TV18 poll shows majority of market participants are predicting a 50 basis point hike. Majority also expect another rate hike in December. The Competition Commission of India is yet to wave the green flag to the merger between Zee Entertainment and Sony. Sources say a meeting at the CCI was inconclusive. The deal proposes to create a $10 billion media behemoth. A fresh twist in the race to acquire the Shrey Group companies. ArcelorMittal throws its hat into the ring. Sources say the legal battle with Shrey Infra over the Odisha slurry pipeline prompted ArcelorMittal to make the move. That's an exclusive.
I do believe the best definitely is yet to come, and Q3 will be a good judge of that.
The best is yet to come, says Puneet Chatpal of Indian Hotels. Expects demand to outpace supply this festive season. Says Taj is a brand capable of running Hotel Ashok, which is up for grabs, but also adds that changing a brand will be time-consuming. Indian Hotels will open more properties abroad, but will only manage the assets and not buy them. The Supreme Court clears the air on abortion rights in a landmark verdict. Rules that unmarried women are also entitled to legal provisions allowing the termination of pregnancy beyond 20 and up to 24 weeks. Married women subject to marital rape can seek abortion resulting from forced sex. The Supreme Court will hear petitions against WhatsApp's privacy policy from January next year. This after the Union government sought time till the winter session of Parliament to pass a data protection bill. Rajasthan Chief Minister Ashok Gehlot pulls out of the race for the next Congress president, says he's deeply pained by the MLA's revolt. Former Madhya Pradesh Chief Minister Digvijay Singh, set to file his nomination tomorrow, meets and hugs his prospective opponent Shashi Tharoor, who's the only leader to have filed his nomination so far. Russia's Vladimir Putin will formally sign agreements tomorrow enabling the accession of parts of Ukraine that overwhelmingly voted in its favor in a so-called referendum. Meanwhile, Sweden reports another leak in the Nord Stream gas pipeline. Shares of the iconic sports car brand Porsche rise in a landmark debut at the Frankfurt Stock Exchange. The parent company Volkswagen values Porsche at nearly $75 billion. Well, straight to the day's market action. The stock market's declining for the seventh day in a row, with the Sensex and the Nifty at their lower levels in over 2 months. Mid-caps, though, bucked the trend today, closing about 0.5% higher. However, for the September series, markets have reversed gains of the last one and seen the Nifty fall by about 4%. That's stock market action for you. But in the currency market, the rupee gained against the dollar, but remained closer to the 82 mark, so there was a little bit of recouping today. However, the British pound continues to weaken against the dollar despite the Bank of England's decision to buy bonds worth $65 billion. And the big story this evening, a pleasant macroeconomic surprise. India's current account deficit has widened to nearly $24 billion in the first quarter of this financial year, but that is well below the market estimate of a $30 billion deficit. Strong growth in services export has managed to keep the deficit in check. Latha joins us now with more. Latha, so not what the market expected, and this will go down as a pleasant surprise.
This is a very big surprise and a pleasant one from the Reserve Bank data that the current account deficit is 2.8% for the first quarter and not 3.5%, which was the consensus on the street. The biggest reason why the current account deficit has come in lower is the outstanding rise in services exports. Net services exports have risen by 35% to about $31 billion. Now, why this is a surprise is that the PIB on a monthly basis gives us the monthly services, imports and exports. And on July 14th, we have a press release from the PIB saying that the April, May, June services net exports is 25.6 billion. But today the data is indicating 31 billion. That is where economists have been positively surprised. And therefore, the final numbers are indicating a lower current account deficit because the services exports are higher than expected. Even private transfers, that is Indians living abroad and sending money, that item comes in as private transfers. That's slightly higher than expected, but people expected it to come 20% higher. It's come 22% higher. Those are the positives, and the rupee is likely to react positively because everyone was worried that the current account deficit this year will be higher than 3.5%. That the first quarter has come at 2.8 indicates there can be surprises down the line. So it's possible that the currency will react positively. It may have a slightly lower start, not at 81.90, maybe lower. But of course, we have to see how the global markets behave.
Yes, Lata, many thanks for joining us. But staying with that story, here's the big newsmaker this evening. India's outgoing Commerce Secretary, BVR Subramaniam, spoke exclusively to me. He said India's service export growth is, and I quote, rocking. He's also upbeat on the export growth for merchandise and service export going forward. Said a trade deal between India and the UK is in the last lap. 90% of the issues have been ironed out. But of course, one will have to wait to see how this progresses given the change in the UK government. Take a look.
I am not that terribly pessimistic about what's in store for us on the trade front. I mean, we have an ambitious target this year of $750 billion, which includes both goods and services. Last year, we targeted $400 billion and we aimed and got $422 billion. We are going to touch $470 billion, which is a good $50 billion more than last year as far as merchandise goods are concerned. And services, they're actually rocking because last year's excellent services performance of $250 billion plus was without travel, tourism and other elements. The UK one, as everybody knows, is in its final stages. We are close to 80–90% done with that. There was a bit of a setback in terms of the changes that were happening at the other end. You know, there was a change of the Prime Minister and the government there. There was an unfortunate the death of the Queen there. So there were certain delays. But in spite of that, I think at the official level, things have been moving. And I think we should be in the last few laps of that agreement. We are not working to a deadline per se. But I think we are working with efficiency, and efficiency automatically ends up throwing up deadlines.
Well, that is the outgoing Commerce Secretary. Now, the government has lowered its FY23 borrowing target by 10,000 crores to 14.21 lakh crore rupees. And Sapna Das joins us now with more on the borrowing calendar. Sapna.
Well, a bit of a pleasant surprise here, though, of course, the amount reduced is just around 10,000 odd crores. But definitely it sends an important signal to the market that the government is not really, planning to borrow a hefty amount just because some of the expenditure side is on the higher side. Announcements that came in via cabinet yesterday, for example. All in all, 5.76 lakh crore is what they're looking at for H2. And the overall number, of course, is now down to 14.21 lakh crore, as you pointed out, from 14.31 lakh odd crore. If you add the green bond issuance, which has been pegged at around 16,000 crores, then the total number rises to 5.92 lakh crore. But 5.76 lakh crore is what the actual number is going to be in terms of the gross market borrowing for H2. Surprisingly enough, even the WMA, the Ways and Means Advances, is lower to 50,000 crores. The auction amount via T-bills is also going to be lower as compared to the previous quarter. So this is probably indicating a better fiscal health on part of the government. As far as those 10,000 odd crores are concerned, well, there are other sources for them to, take up the money. For example, small savings is something that they can look at. Some of the rates have actually been hiked on the higher side for Q3. So this is what it looks like going forward. At least till Jan, there isn't any expectation of government exceeding its borrowing limits, and I think this is what the DA Secretary, Mr. Ajay Seth, had told us, or rather at least had hinted at day before yesterday when we had asked him that how do you plan to do the borrowing in H2, and will you be within the limits or will you be exceeding that? He was very clear in that we are sticking to the fiscal consolidation roadmap, and that would include market borrowing.
All right, Sapna, appreciate you joining us. So two positive surprises coming in, one on the current account as well as the borrowing calendar. The Monetary Policy Committee is expected to hike the repo rate for the fourth consecutive time tomorrow. A CNBC-TV18 poll shows majority of the market participants predict a 50 basis point hike, and majority also expect another rate hike in December. Ritu standing by with the details of the CNBC-TV18 poll. Ritu.
Well, the Reserve Bank is expected to raise interest rates for the fourth consecutive time, and there is a wide consensus that the hike could be around 50 basis points. All the respondents to our poll said that there will be a 50 basis point hike from the MPC, arguing that there is no real reason for the RBI to opt for a token smaller move, given what we're seeing from central banks around the world. The Federal Reserve, for instance, just delivered its third straight 75 basis point hike and has shown no signs of slowing down. The majority expects RBI to move swiftly and get the repo rates to 6.25% by December itself, while some are expecting rates to hover around 6%. Now, 4 out of 10 respondents said that peak repo rates could go as high as 6.5% in this cycle, while others pegged it at anywhere between 6 to 6.25%. Inflation does remain high, yes, but it is more manageable at this point. It is expected to have peaked in April, like RBI says, and while there are risks to the outlook, economists do not expect the RBI to revise its current forecast of 7.2%. However, given that inflation has stayed above RBI's tolerance limit of 6% now for 3 consecutive quarters, the MPC will have to write an explanatory letter to the government explaining the reason for its failure to contain inflation. Now, the 13.5% GDP growth we saw in the first quarter, that was below RBI's projection of 16.2%. Now, while a third of the respondents expect this growth forecast to be left unchanged at 7.2%, the majority believes it will be lowered to around 7% in this policy. Now, on the stance, there was no real clear majority. 40% expect that RBI will leave it unchanged at withdrawal of accommodation, but half expect it to be changed to neutral, with some even expecting some tinkering in the wording. Now, the banking system liquidity slipped into deficit for the first time after almost 40 months recently, and there is generally more withdrawal of cash as well from the system during the festive season. So whether it is an OMO or a VRR or something else, markets do expect RBI to take note of the deficit and address the issue in some fashion. The other thing markets will focus on is comments on the rupee, on whether there will be any measures to attract more dollar inflows, and lastly, any comments at all from the central bank on the global bond index inclusion will also be keenly watched.
Ritu, many thanks. Yes, stay tuned to CNBC TV18. We will bring you the MPC live right here on the channel. The Competition Commission is yet to wave the green flag for the merger between Zee Entertainment and Sony. We learned from sources that the meeting at the CCI was inconclusive. The deal proposes to create a $10 billion media behemoth. Timsy Jaipuria standing by with the details. Timsy.
Well, when it comes to the actual merger deal, this was supposed to be a final hearing that CCI was slated to hear today. And after almost 2.5 hours of hearing, oral submissions made by both Sony and Zee, CCI was not convinced. That's what our sources say, that the meeting was inconclusive, the hearing was inconclusive. Oral submissions could not convince the entire commission. Remember, the concerns raised by the commissions were that both Zee and Sony, once merged, can become two huge, humongous channel, and that too leading the entire market, and they could dominate the market position. Also, that is what something CCI was clearly looking at, that there could be a clear misuse by the merged entity, which could have at least as many as 92 channels under its one umbrella, and that was something that the CCI was concerned about. Oral submissions, as I said, could not convince the commission, and that's why they've been asked to make written submissions, so that for next 4 to 5 years, CCI wants that there should be no misuse of dominant position by the merged entity. So let's see how soon both the channels are ready with their written submission, how soon CCI then assesses the written submissions and takes forward before it comes out with a final order.
Timsy, many thanks for joining us. Here's another exclusive tonight, a fresh twist in the race to acquire Shrey Group of companies. Global steel major ArcelorMittal has thrown its hat in the ring. Sources say the legal battle with Shrey Infra over the Odisha slurry pipeline prompted ArcelorMittal to make the move. The Odisha slurry pipeline is a key part of operating SR Steel's plant, which has been acquired by ArcelorMittal. The other big newsmaker tonight, Puneet Chhatwal of Indian Hotel, says the best is yet to come for the company. In an exclusive conversation with CNBC-TV18, Chhatwal said he expects demand to outpace supply this festive season. He also spoke about the possibility of Indian Hotels acquiring Hotel Ashok as part of the disinvestment plan. While he said that Taj is a brand capable of running Hotel Ashok, he also added that changing a brand is time-consuming. He said that Indian Hotels will open more properties abroad but will only manage the assets and not own them.
There are things which are out of your control. So whatever is out of my control, that does not bother. The job of the management is to mitigate through all possible crises. But these are things like COVID. We could not have done anything about it. What we did and how we conducted ourselves, that was under our control. And I think on that front we did well. But I do believe the best definitely is yet to come, and Q3 will be a good judge of that. There are very few people, or very few brands, better said, who have the capability to run an institution like the Ashok. And definitely Taj qualifies amongst one of those very few players that are there. It's a very, very iconic asset, but it's a lot of work in repositioning, redeveloping, and reimagining the Ashok. It's going to be time and capital intensive. We would look at one or the other strategic European destination, and also once we have better understanding of where our airlines are going to fly to, where we have that kind of competitive advantage, we will look at those, but definitely not to own any assets. We will not buy assets, we will manage third-party assets or enter into an operating lease with an institutional investor, which is a very common model in Europe.
And you can catch the full conversation with Puneet Chhatwal at 9:30 p.m. on the record right here on CNBC-TV18. In other news, some respite for car manufacturers. Road Transport Minister Nitin Gadkari has extended the deadline mandating 6 airbags in all cars by 12 months. Companies will now have to comply with the rule from October 2023. The big national story, a landmark judgment by the Supreme Court. The country's apex court has ruled that all women, whether married or not, are entitled to abort a pregnancy anytime up to 24 weeks. Ashok Kumar brings us the latest from Court Corner.
With a landmark verdict coming from the apex court, and perhaps it's coming on September 29th, the day which is recognized as the day of safe abortion. We're talking about the right to abortion here. We're talking about reproductive and bodily autonomy. That's how the Supreme Court phrased it. The concern that was here before the apex court was the legal anomaly called the MTP Act. Now, the MTP Act, the way it is structured, at least was structured prior to this judgment, was done in a way that it specifically excluded single unmarried women from getting abortions done. Now, this was something that the apex court has taken objection to, a bench headed by Justice Chandrachud very clearly holding that the marital status of a woman cannot be grounds for denying her or for refusing safe treatment for getting safe and legal abortions done. In fact, the Supreme Court has very clearly held that all women till the week 24 should have equal access in terms of abortion facilities and abortion rights. Not just that, the apex court also recognized instances of violence within marriages, and this is perhaps the first time that by way of a judicial verdict, we have recognition of the concept of marital rape. The Supreme Court said that there is no denying it, that this is clearly something that happens, and that forced pregnancies within marriages are also eligible for abortion, at least till the week 24. So this is an important landmark clarification coming in from the apex court. In fact, we spoke to very many stakeholders. Let's in fact go across to them and listen in to what they had to say.
These are the basic fundamental rights which should not be, no one should be denied from these rights in India, and therefore it will be a huge success for India, and it will set benchmark for all over the countries.
Well, the second key takeaway was the WhatsApp privacy policy case. This is the case where various petitions have raised the question why WhatsApp has different standards of privacy for its users in Europe versus its users here in India. WhatsApp responded by saying, look, we have different rules to comply with in Europe. There are different laws here in India. This invited a sharp comment from the Supreme Court observing that, look, this serves as an admission that WhatsApp does indeed have differential standards and that India, which is the largest market, deserves its due. Now, Centre importantly has clarified that they look to come out with a data protection regime as early as the winter session of the Parliament, and that's the deadline that the apex court has given them. Either come out with a data protection law in the winter session, or the Supreme Court will go ahead and will proceed to hear and decide this WhatsApp privacy policy.
Small-scale renewable energy solutions are starting to make a big difference in the rural economy. They're not only offering new solutions to improve overall income, but also transforming existing solutions which are assisting traditional sectors. Jacilia K and Shilpa Ranipeta bring you more.
This is a bunyad, a solar-powered machine used to make silk thread by women in the remotest regions of states like Jharkhand, Chhattisgarh and Odisha, where electricity connection is either unstable or non-existent. These machines are used to extract silk threads from silkworm cocoons and have been developed by Resham Sutra, a Delhi-based for-profit social enterprise. Started during the lockdowns due to the pandemic, Resham Sutra has delivered over 10,000 such machines and directly helped over 12,000 rural women and their families improve their incomes. Like all good things, it started small.
We saw some good response from the women we were working with, and that actually led us to actually think of looking at it as a business and trying to find a solution that not just technology. Now we are looking at supporting the rural women across the value chain.
Resham Sutra is not alone in such social enterprises. Under a program Powering Livelihoods, which is jointly run by the Council on Energy, Environment and Water and Wilgrow Innovations Foundation, there are 15-odd startups looking at scaling up their renewable power solutions. Raheja Solar Food Processing, for instance, designs solar dryers which are traditionally used to dry agri-produce. The company has found ready takers for its product, with women engaged in drying fish and spices.
तो मैं अभी सोलर ड्रायर लिया तो मेरा एक दिन में मिर्ची सुखा के हो जाता है। पहले तो मैं इतना ज्यादा 100-150 किलो बनाती थी। इस बार मैंने इस सीजन में तो 500 किलो मसाला बनाया है। जब मेरा यूनिट हो जाएगा तो मैं सोलर का जरूर मुझे 101% दिखाऊंगी।
Direct customer is going to be definitely women itself, because men can work in the farm, but women are a better person to do the processing. So even our main priority is the person who is the beneficiary of the dryer must be a woman.
According to a recent report by International Labour Organization, the share of women working in renewable energy is significantly higher than in the overall energy sector across the world. This has sparked hope that the global transition to renewable energy could advance gender equality, especially in the Asia-Pacific region. The switch to renewable energy is also being seen as an employment generator. Council on Energy, Environment and Water estimates India generating 3.4 million jobs, both short and long term, by installing 280 gigawatts of solar and 140 gigawatts of wind capacity.
Economic potential for these small-scale renewable energy-based solutions in the economy, and we pegged a number which was close to $50 billion US. So it's a pretty large number just coming on back of these very small solutions. In Indian rupee term, it will be about 3.5 lakh crore Indian rupees, right? And the second estimate that we did was how many livelihood that we can impact, the question that you are asking. And there we estimated that at least 22.3 million, which is close to 2.3 crore livelihoods can be impacted on back of these solutions. This is really leveraging small-scale clean energy for rural livelihoods. Financing is very critical to enable adoption of these solutions, but it is a journey. You need to work with financiers and bankers. You need to cover some of their risk to start with.
As these measures take shape and grow roots, experts believe financing options from both traditional banks and the shadow banking space will multiply and give India's green economy that much needed boost. In Mumbai with Jacilia K, Shilpa Ranipeta.
The world's largest brewer, AB InBev, is now going beyond beer. The maker of Budweiser, Corona and Hoegaarden will enter into whiskey, gin and ready-to-drink beverage segments in India this year, taking on the likes of United Spirit and Radico Khaitan. Shilpa Ranipeta caught up with Kartikeya Sharma of AB InBev to find out why the company chose India as the starting point to diversify its portfolio.
So our big focus beyond beer is ready-to-drink. We also saw opportunities on the premium end of whiskey as well as gin, and we continue to explore other subcategories.
You're already piloting seltzers in Maharashtra. When will you launch the whiskey and the gin, and will these be new brands that you launch or under existing ones like Budweiser?
As far as whiskey and gin are concerned, we would be announcing that in due time over the next 3 to 4 months. It's going to be a combination. So we're keeping a very open mind towards propositions that we may have the world over versus also propositions that we could leverage from our existing portfolio, or actually creating for India propositions which we're completely open to as well.
Well, give me a sense of what the pricing strategy for this will be, and will you be producing these locally?
We identified price points that would be in what the spirits world calls the premium and premium plus segment. So this puts it, more in the cohort of some of the brands that are more of the imported nature. But we, of course, are looking at, domestic distilling. And so that gives us an advantage with margins as well.
Well, that is AB InBev diversifying its portfolio, starting here in India. With that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Stay tuned. News continues on CNBC-TV18.